First Citizens will acquire failed Silicon Valley Bank. Remember, the Federal Deposit Insurance Corporation, FDIC, took over Silicon Valley Bank on 10th of March after depositors rushed to pull out their money in a bank run that also brought down Signature Bank and wiped out more than half the market value of several other US regional lenders. For Citizens Banc Shares Inc., a regional bank has built a reputation for buying the troubled rival. And remember, the deal comes after several attempts to sell the bank by US Federal Deposit Insurance Corporation did not succeed. First Citizens shares soared on the news of the deal, surging more than 50%. Our guests continue to be with us. I want to come to... Okay, let's play up a quick bite before I go to my guests.
So what we've seen is lessons learned from banks in the past. Now, we all remember the great financial crisis and the bank crisis then. Very different than today. And the Fed is trying to make that very clear. The FDIC, the Treasury, really trying to send a strong message. Look, this is not a credit crisis like we said in 2008. So where we've seen bank weakness, we've certainly seen very quick responses to have other institutions come in, merge with these assets, take them on. You know, SVB was a very sought after institution, very well-heeled and exciting to some people clientele. Interesting matchup with Citizens. I don't know the reasons why the FDIC decided this was the best choice, but I certainly know why Citizens is interested in SVB. California is not part of their footprint. It's a great opportunity to get into that part of the footprint. And they do have a history of building out their business, buying distressed assets. So they've come into much smaller situations like this before. And it might be that track record that helped them look attractive for this situation. You know, they're half the size of what SVB was. So they're stepping up to walk into becoming a very major player in the country.
Okay, there seems to be some hope there finally for SVB. Amit Gupta is joining us at this point in time. My colleague Suyash continues to be with me in the newsroom. Amit, what is the larger impact of SVB acquisition on the US stock market? We've seen some correction today and the bank nifty in India is also up. What is the expectation on the stock market?
Hi, thank you for having me. So I think it's a short-term positive. Definitely, it sort of risk off in the market. What has happened is that FDIC has given a $70 billion credit limit to the First Citizen Bank, to the Silicon Valley Bank, sorry. And you know, that sort of eases out the concerns about the liquidity. Because you know the First Citizen Bank will be doing the operational thing, and they don't have to worry about the managing the liquidity risk into this. So I think it's a short-term positive, but I would still watch things over the next 30 to 60 days. So just to see how the credit crunch is moving into the stock market and into these regional banks, because what is happening is that a lot of these regional banks are seeing very heavy outflows, and these are going into the larger banks. And if you talk about the numbers, then regional banks are responsible for 80% of the commercial real estate lending in the US, and about 50% of consumer lending in US. So these are big numbers, and if deposits keep running away from the smaller banks, it keeps going to the larger banks. Then I think it's going to be a sort of a credit crunch on the US economy, because the big banks cannot fill that void immediately, in very short period of time. So the economy will take a hit and the inflation problem will be solved, but that's a wrong way of making everything worse. So I think it's a short-term positive to the markets, but I will still, want to watch the market over the next 30 to 60 days. And then decide take a final call on this matter.
Okay, Rajesh Tambe is also with us. Rajesh, it feels like it's one bank to itself. There is an absence of a policy guidance on banking crisis in the US. The expectation was, of course, that the government will step in, will bring in some sort of guidance here on what can banks do, but that really hasn't happened. We're seeing banks trying to acquire each other, shore up liquidity, ensure that the another bank doesn't fail. But that's not enough, is it?
Absolutely. Now, there's 2 points, in fact, which I'd like to bring in. One is that, in fact, America should learn a lesson that, stop interfering into the affairs of the countries, Why do you want to fund this? What is your interest? I've not been able to establish this. I've not been able to understand. I think, 16 invasions you did, 14 or 16 invasions you did, you invaded the different countries of the world. What did you achieve at the end of the road? Nothing. Where are you on the verge today? There's so much of unemployment there. The inflation is so high. You're going to print more of currency there. And these guys, in fact, these Goras are talking about, the way, what I would suggest is, come to Reserve Bank of India, work in Reserve Bank of India. You'll come to know how to run a bank. We are the most systematic people. We know how to run a bank. Why these guys are hesitant to come to India and learn from us? And these guys are talking about, 60 days and 90 days. Nothing is going to happen in 60 days and 90 days. You mean to say the whole situation will change in 60 days? इनके पास कोई जादू की छड़ी, you have something very, you have some magic stick with you. That in fact, some magic will take place and things will get back to normal. The first and the most important is stop funding this war. And if you do it and stop interfering into the affairs of the different countries and look at your own country, you will be at a proper position. And things will get back to normal. This is what US has to learn.
Amit, I want to come back to you. You were saying that this seems to be a short-term fix. So what should be the way, or how should investors proceed if they are looking into getting into banking stocks?
I'm assuming we are talking about Indian banking stocks. So I think what has happened after this crisis is that a lot of startups, because remember the Silicon Valley Bank SVB was basically funding startups. So a lot of Indian startups which were based out of US and were banking with the Silicon Valley Bank, they have actually moved out of US, and a lot of their private equity and venture capital folks have told them to open up accounts in India. I think that's a big positive, because that money is going to come here. Those deposits are going to come to India. In fact, I think last weekend I saw at least 3 private banks, large private banks, giving out advertisements in the full-length advertisements in the newspapers, and actually inviting a lot of these banks to come and bank with the Indian banks and open the deposits. So I think that shift will happen because nobody really wants to take a chance, and nobody's sure how the situation will be there in the next next quarter. So I think for India, it's a big positive. And I would be a buyer on dips in a lot of these financial stocks. As a disclaimer, we do own a few of the financial stocks, and we will be looking for opportunities to add to them or even initiate fresh positions into them.
So just to be clear, Amit, you're fairly optimistic on the Indian banking situation, right? You don't see the crisis reaching Indian shores. Is that so?
Yeah, as of now, there is not much instance that it will help. It will, sort of hit Indian banks a little bit. I think Indian IT would be probably more impacted than Indian banks. The reason I say that is because a lot of these Indian IT companies, especially the top 5 large cap IT companies, their BFSI exposure in US is close to anywhere between 28 to 40%. And because these banks focus in the next couple of quarters will be managing liquidity risk, managing interest rate risk. So I think the new developments which happens with the new development projects which happen with the IT companies, that would slow down and sort of have a crunch on the margins of these IT companies. So I think the impact on IT will be a little bit more. I don't see too much of impact on the Indian banking sector as of now, at least.
We're talking about short term, right? The long term prospects, maybe 2-3 years down the line, could Indian banking sector be in trouble?
Sorry, I missed the first part of the question. Why it will be in trouble?
No, what I wanted to ask was that you're talking about the immediate impact of the banking sector. I wanted to understand if 2-3 years down the line, this crisis could also reach Indian shores.
No, no, I think the Indian banking system is much more robust, and the kind of measures which RBI has taken in the last few years, as far as the NPAs are concerned, that is very good. In fact, if you look at the recent report, RBI has already asked to make a 20% extra exposure to the top 20 groups, corporate groups in India. So I think that's a very good sort of a proactive measure taken by RBI to already tell banks to increase their exposure. So given the NPA cycle where we are, which is very very low, and we are just credit growth is just picking up. I don't see an issue in the next 2 to 3 years as far as the lending is concerned to the big corporates.